Hello everyone, I'm so glad you guys join us today because we're gonna explain to you what is tax planning. Come on and join us. The process of analyzing a financial situation or plan to make sure all the components come together to enable you to pay the smallest taxes possible is known as the tax planning. According to the Income Tax Act 1967, it will tell you about the basis of tax computation and also tell you when to pay and how much to pay. There's a lot of section in the Income Tax Act 1967 that you can involve in paying taxes. Did you know that all the people who are working in Malaysia or not working in Malaysia and big companies or small companies can be taxable? Yes, they can be taxable. Income tax is levied on every individual for income accrued or issued in Malaysia or received in Malaysia from outside Malaysia for each year of assessment. An individual whose total income exceeds the set threshold value, which can be taxed, must register an income tax file, and also a person in act including a company, a body of person, and a corporation sole can be taxable too, but the partnership is not taxable entity. This is a section 3. How about Section 4? Section 4 consists of many various classes income, such as business income, employment income, dividend, interest or discount, rents, royalty pension, annuities, and gains or profit. Section 4A is a special class of income from the non-resident. Did you know non-resident of Malaysia can be taxed? Yes, they can in the Section 7. First, in the Section 7, the individual is in Malaysia for 182 days or more in the basis year. The second, the individual is in Malaysia for less than 182 days in the basis year. Third, the individual is in Malaysia for 90 days or more in the basis year. And the last is into Section 7, the individual is not in Malaysia or in Malaysia for a period of less than 90 days in the basis year.
Are two types of tax in Malaysia which consist of direct tax and indirect tax. What is direct tax? Direct tax is a tax that is levied on a person or enterprise income. The taxpayer is paid directly to the tax collector. Inland Revenue Board Malaysia (IRPM) is responsible for the direct tax. The direct tax consists of income tax, petroleum income tax, real property gain tax, and stamp duty. Next, indirect tax. The indirect tax landscape in Malaysia is evolving at a fast pace. Since the repeal of the Goods and Services Tax (GST) and the implementation of Sales and Service Tax (SST), indirect tax risk has never been higher. Service tax is levied on prescribed taxable services. Meanwhile, many goods are exempt from Malaysia tax.
In Malaysia, there are several agencies and companies that provide tax planning services so that an individual can help them to plan their property and reduce their tax liability. Some of the prominent ones include: first, PricewaterhouseCoopers, PwC Malaysia. It is suitable for individual clients that have a high net worth individual seeking advice on estate planning, income tax optimization, and investment strategies. For corporate clients, usually a multinational corporation looking for cross-border tax advisory services to navigate complex international tax regulations. Next, Deloitte Malaysia, which is suitable for individuals who are local entrepreneurs seeking advice on personal income tax and investment planning. While for corporate clients that are major manufacturing firms needing comprehensive tax management consulting to optimize their tax position and ensure compliance. Last but not least, KPMG Malaysia, that is suitable for individual client that a senior executive requiring personal tax planning and compliance services, including stock options and bonus planning. for corporate clients is for financial services company that need advisory services on indirect taxes like GST and transfer pricing. These firms are well known for their expertise in tax planning and compliance, and they cater to both corporate and individual clients. So, don't forget to plan your tax planning for your future.
Have you ever wondered why tax planning is important? This is because it can minimizing tax liability. Planning helps to minimize tax liability by taking advantage of tax deductions, credits, and exceptions. By reducing the amount of taxable income, taxpayers can pay lower tax and keep more of their money. Maximizing tax planning is an essential tool that can increase your cash flow, allow you to invest more, and let you accumulate wealth over time. Additionally, modern banking services offer convenient options to make a bank account online, seamless financial management, and enable individuals to optimize their savings effectively by reducing your tax liability. Achieving financial goals, you can free up resources to invest in education, retirement, or other long-term objectives by minimizing tax. Avoiding penalties. Failure to comply with tax laws can result in penalties. Tax planning can help taxpayers avoid this penalty and comply with tax regulations.
For the conclusion, tax planning is an essential aspect of financial management that allows individuals and business to optimize their tax liabilities. Effective tax planning can minimize the amount of tax owed. This proactive approach not only ensures compliance with tax laws but enhances financial efficiency, allowing for better resources allocation and long-term financial stability. I hope you will get some information and understand what is tax planning. Thank you.